So bank reconciliation statements, okay? Let's now look at bank reconciliation statements, okay? Bank reconciliation statements. So it is actually extremely important that you understand this fact, that usually the bank, the business keeps record, okay? The business always keeps what? It keeps record. It does keep record of all the transactions that they do engage themselves in, okay? The business engages into what? Into transactions, and usually the business does keep record of all those transactions, okay? The business keeps record of all those transactions that they engage themselves in. So now, those transactions, okay, those transactions that the business engages itself in are usually recorded in the cash book. Follow nicely what I'll show you what to write. Don't worry, I'll even share the notes with you. Those are usually recorded in the what? In the cash book. The transactions of the business are usually recorded in the cash book. Then some of these transactions, they do involve the what? The bank, okay? Some of these transactions, they do involve the what? The bank. So what usually happens is that there should be an agreement. And what kind of agreement am I talking about? There should be an agreement in terms of what is written in the cash book. That is what, that's the records that the business has, and what is actually written in the, that is what the bank has on record. Usually, what the bank has on record is written on a bank statement, okay? A bank statement. So now, there should always be need of harmony, okay? There should always be need of harmony between what you have in record as a business and what the bank has in record. Because these are usually the same transactions. For example, you receive a check as a business. You will record in your cash book that you have received the check, and at the same time, the bank should be aware your bank account. Your people are the people that are holding your bank account or that bank. They should be aware that you have received. Yeah, and usually they keep record in the bank statement, and also here in the business we keep record of such transactions. Now there is need of making sure that these records are the what? Are the same, okay? These records that we have are the same. So, but most of the times, these records are never the same, okay? Most of the times, these records are never the same. There is always some differences that you do what? You do find. So, in oftentimes, you find that the records that you have in the business and those that you have actually at the bank are usually different, okay? So what you need to do is to ensure that these records agree they are the same. So now, let me start by showing you what causes these differences. What makes it, or what brings about these differences is what I need to show you right now. So the following are the common scenarios, and you can write somewhere the causes of the differences. The causes of the what? Of the differences in the bank statement. In the bank statement. And in the what? In the cash book. What is it that causes the difference? Why should there be the differences? Or why do we have the differences in what we have in the bank statement? That is what the bank has, and what we record here in the cash book. Why are there always differences? I've told you that at the end of the day, we'll have to make sure that these differences are eliminated. Everything is just same. But first of all, let's understand what causes these differences. And you have to pay particular attention to that. So far, are you able to hear me? And are you able to see the screen?
Yes, sir.
Okay, thank you. So the common causes of the differences in the bank statement and in the cash book are the following. Number one, we have, what do we have that causes the difference? Let's start from unpresented checks. Unpresented what? Checks. This is the first cause of the difference. What are unpresented checks? Okay. So, these are the what? They are the checks that our customers let me put it like this. Our suppliers, okay. Our suppliers have not yet taken to the bank. For what? For crediting or for processing. Okay. The checks that our suppliers, right, have not yet taken to the bank for processing are called unpresented what? Unpresented checks. We call them the unpresented checks. So what that means is that, and follow nicely, you don't need to forget about these things since you are now, preparing for the final exams. You have to be moving forward. Get this one. You issue a check, okay, as a business. You decide to issue a check. As you issue a check, you're going to record in your cash book that we have given out the money. Let's say we have issued a check worth 500,000. Okay, so you say we have issued 500,000. So in your cash book, what is it that you're going to do? You're going to credit the cash book, isn't it? You will credit the cash book. Why are you crediting the cash book? Because you are saying that we have given out money, okay, with 500,000 from our bank account. But the time that you are drawing the check, you are not drawing the check at the bank. You draw the check from the business or sometimes from home, and you give it to your suppliers. Now, what will happen is that before these suppliers to whom you have given the check, take these checks to the bank so that these checks can be honored or can be processed, the amount will still be in your bank account. You didn't get this one. The amount will still be in your bank account as long as these suppliers that you have given a check, they have not yet gone to the bank so that, that check can be processed so that they can have your amount, their amount. So such checks that have not yet been processed, or they have not yet been taken to the bank by your suppliers, of course, and that makes the money still being there in your account, they are called unpresented checks or outstanding checks. Checks that are unpresented. Is that clear? Hello?
Yeah.
Does that help?
Yes, sir.
Okay. If that helps, then we can move on to the other cause. This is the common cause. What will happen is that this check will be reflecting in our cash book, but this check may not be there. It may not be reflecting in the on the bank statement, because the bank is not yet aware that you decided to issue this check until the check is taken there. Let me have the second one. Take notes of these. These are very important notes. Number 2, uncredited. Uncredited what? Uncredited checks. Now, what about uncredited checks? Let's write like this. These are checks received from our customers, but not yet processed by the bank. Right. You see, these are the checks that we have received as a business. Okay. Remember, as a business, there are some people that owe us. There are some people to whom we have, supplied on what? On credit. There are those that the customers that to whom we have sold on credit, and then those customers, they owe us. Follow nicely. Then since they owe us, they need to pay us. So what happens is that these same customers, they happen to draw a check and give us a check. But as long as we have not yet, us as a business now, have not yet taken that check to the bank so that we can have that money, what will happen is that in our cash book, immediately we receive this check, we are going to indicate in our cash book that we have received. So we'll debit our cash book. But that does not indicate that we have received that money. Because that money, since it's a check, it needs to go into our bank account. And since it's a check, the bank has to process that check so that the money can enter into our account. But because we have not yet maybe taken this check to the bank so that it can be processed, or the bank maybe has not just yet, we presented it, maybe it was a holiday, the bank hasn't done that, what will happen is that that money will not be in our bank account as a business. It will not be in our bank account, but here in our cash book, like right at the business in our cash book, it will be showing that we have received it. We received the money, since we are going to record using our hands. But the money will not actually be on our bank account, in our bank account, sorry. So because of that, you find that there is no harmony. So this problem has to be cleared again, and we'll show you how we clear that. So this is the second cause of those differences, the uncredited checks. Basically, the checks that we have received from our customers, but we have not yet just, taken them to the bank, or maybe the bank has not yet processed the checks. Is that clear?
Yes.
Okay. Let's have the third one. The third cause of these differences. And the third cause of these differences are what we call the dishonored checks. The dishonored checks. You can write down. What does this mean? Okay. These are checks that cannot be processed by the what? By the bank, because of various reasons. Now, I want the class to say what could be the common causes of the checks being dishonored. Anyone can tell us why the check cannot be honored? You can turn on your mic and tell us. You can go ahead. Hello, colleagues. You can just turn on your mic and tell us, why do you think the check cannot be honored?
If the account numbers fail to match.
Okay, thank you. So number one, if you're told there is an error, right, in terms of the account numbers, then you find that the check will not be honored. Thank you. Any other reason? Anyone else?
Insufficient funds.
Okay. If at all we have insufficient funds, okay. If we have insufficient funds, like we don't have sufficient funds, insufficient funds. That's the other cause. Like you write a check that you want to give a check to someone for, maybe you draw a check worth $1 million, but you know, in your bank account, there's just maybe 200,000. That check will not be honored. Any other reason?
If the signature is not there of the person.
Okay.
That,
Okay, thank you. So the issue of the signature, if the signature is not there or the signature does not match with the signatory is not agreeing, then it cannot be processed. Any other reason?
Overwriting.
Sorry?
Overwriting.
Okay, overwriting. What do you mean?
Like you write a lot of things on the check.
Okay. If you write too many, sorry, go ahead.
Yes, if the amount in words does not match the other amount figures.
Okay. So if the amount in what? In words does not what? Doesn't match.
Yes.
Yeah, if it doesn't match, you know, the figures, the amount in figures. In words, you write something else. Again, in figures, you write something else. Then we have a problem. Is that clear? Okay, so now these are some of the causes. These are not the only causes. These are some of the causes that a check may not be honored. So there is that time when you issue a check, okay, but that you are going to record in your cash that no, we have given out money, we have issued a check, but that check bounces back. Okay, these are causes. This may cause the differences. Again, sometimes you may receive a check. You receive a check, then you record in your cash book that, oh, I have received the check. But when you take that check to the bank, what happens? You find that the bank is not processing that check. The bank is not honoring that check. So again, that will still cause the what? The differences, because in your cash book, you show that you have received, we have received, but actually that money will not come into your bank account because that check cannot be honored. Okay. Right. The other cause of the differences is of the interest charges. Now, the bank charges you for maintaining, you know, your account. There are some charges that the bank does for maintaining your account. So usually what happens is that the bank will not come to you and ask you, can we deduct, you know, they'll just deduct that amount, sometimes usually without your awareness. And so since you are not aware, your accountants right at the business may not be aware that the money was deducted, okay? The accountants may not be aware that the money was what? Was deducted. And for that very reason, what will happen is that those same accountants, they'll have to, since they are not aware that the money was deducted, they will have to request for a bank statement for them to see that, you know, some money was deducted. So because of that same, this one is also a cause of those differences, the interest charges. Usually what is aware is the bank. So the interest charges are always there on the bank statement, but they may not be there in our cash book, okay, because we are not aware of that. direct debit. This is the fifth cause of the differences in what we have in the businesses and what we have at the bank. Okay, direct debit. Now, what does that mean? What does it mean when we say direct debit? So there are those times when you just receive the money direct from the what? From the business. Okay. Right? So there are those differences that you actually find. So you issue, for example, you issue an order, okay? Or let me speak like this. For example, you owe or you make a certain subscription, okay? You make a certain subscription. As you make a certain subscription, then those people will be deducting the money using your bank account, from your bank account. Sometimes they don't even need to come, to you, right? They don't need to come to you and tell us, can you give us the money? Since they already have the bank account and you already signed for that, they will just go direct and deduct the money, and the bank will deduct the money. And so you may not be aware sometimes, you may not even receive a message. So what will happen is that you may not be aware that the money was deducted from your bank account until you receive the what? The bank statement. So when you receive a bank statement, that is when you can know that, oh, gosh, the money was deducted, or actually the money was deducted from this bank account because of what? Because of this maybe subscription that I made. Did you get that one? Or anyone has a question on that one? Okay. If there is no question, let's come to the standing order, which is an instruction. This one is an what? Is an instruction, okay, to the bank. Usually it's an instruction that you make to the what? To the bank, so that it can what? So that the bank can be paying some accounts on your own behalf. So what will happen is that, for example, let me say you owe some people, then there are some periodical payments that you have to make. Now, since the payments are regular, they are usually done at a regular interval, you can leave an instruction at the bank. Okay. This is the point all the time where you go and instruct the bank. Okay. And when you instruct the bank, you will have to tell the bank. And what is it that you tell the bank? You tell the bank that you, being the bank, what you're going to do is that on such a date, I owe these people, okay? Make sure you settle their accounts by deducting money from our account. You tell the bank, and this is a business now telling the bank. So the bank will automatically, on such a date that you agreed, okay, pay the money as long as the amount that you have is what? Is sufficient. So as long as you have sufficient amount of money, the bank will always deduct the money on such a what? On such a particular day. So basically that is what usually happens. Okay. That is what usually happens. You will find that on such a date, the bank we will have to deduct the money in your account and you pay or settle those accounts. That's a standing order. You leave a standing instruction at the bank. You tell the bank that please make sure that on such a date, you do the right thing by settling the accounts on my behalf. Is that clear? Okay. I call for questions. Do we have any question from anyone? We are looking at the causes of these. Yeah. Do we have any questions? Hello, are you able to hear me? Are you able to see the screen? Or you are sleeping? Because you guys may start sleeping.
Sir, can you please repeat on direct debit?
Okay, thank you. So on direct debit, what usually happens is that, you know, you may, for example, subscribe for something, okay? You do a certain subscription. So those people will be just coming direct to deduct the money to the bank. They will not really be need to move, okay? Like the bank will be deducting on their behalf from your account and paying those accounts. Usually, that is what usually happens. So usually the amount, the amount due will be deducted. So that you do what? So that you settle the accounts that you are owing, okay? You settle the accounts that you're owing. Maybe one of the good example that we can give you of is, you know, Zoom, right? This same Zoom. What happens is that for me to be able to record class or for me to use these features that are advanced, we need to pay, and usually we pay to Zoom. We pay to Zoom monthly. Now, that was a subscription that was made to Zoom. So on the 14th of every month, Zoom deducts money from our bank account. They usually deduct the money, okay, automatically. Sometimes, you just find the money deducted. They don't even need to ask for permission of what. As long as the amount is enough, they will just deduct. Unless they find that there is no money, or maybe the amount is not enough. That's when they will make now follow-ups. Have to write you messages, emails. Yeah, that's an example where they deduct the money, automatically because you have maybe a subscription or something. Did you get that one?
Yes, sir. But I wanted to ask that, let's say you pay a monthly subscription for the Zoom, right? Then
yes.
For the month you don't have money. Then Zoom fails to deduct. After it sends a message, then you put back money. Do you have to make that new payment method again? Or it follows the old one?
No, it follows as long as you put the money into the account, the same account, isn't it?
Yes.
Yeah, as long as you put the money into the same account, they will have to deduct using the same account. Unless you change, you want to change the bank account. Maybe you put the money in a different account. Then you have to change the details, the account's details there. Or there is that option on the same, platform online on Google. You can change the details of the bank. Once you change the bank details, then they will know that, okay, this person has changed. Then they'll follow the old what? No, not the old. They'll follow the new details and the new account number.
Oh, okay.
You got it?
Yes.
All right. Is there any other question from anyone? All right. So these are the common causes of these differences, okay? I talked about unpresented checks and credited checks. I talked about the direct debits, the dishonored checks, the interest charge, and the standing orders. Okay, those usually they cause differences. These are usually the major causes of the differences in the records. The records that we have right at the bank and those that you have in the business. And for that reason now, you need to create harmony. Okay, you need to create harmony in those records, making sure that these records that are at the bank and those that you have in the business are agreeing. And that idea of creating the harmony or the creation of the harmony is what is known as bank reconciliation. Okay, then the statement that you draw as you are harmonizing is called a bank reconciliation statement. You didn't get this.